Welcome back for my final daily report market analysis video on Thursday, the 19th of March, with me, Richard Perry, looking at this gold chart. And gold continues to just drop away. I've been discussing in the last couple of days whether I think that there is a basis of support starting to form, and it had looked for a couple of days as though, certainly Monday and Tuesday, that there was starting to be something maybe at 1450, 1465 area. And it's interesting that we saw the market sort of hitting resistance at 1550 area. 1551 was an old low, and then 1553 was the reaction high yesterday. And the market fell away again. Again, another interesting level, 1519, has in the last few sessions become a pivot line. Old resistance became supportive and then became resistance once more on the way back up again. And even today, we're seeing $1,500 coming in as resistance. It's just looking at the support line, 1465, that reaction low from Tuesday, has again become the basis of support today. That sort of area, 1450 to 1465, seems to be holding, but the market is sort of more in a bit of a drift at the moment. It has, though, I would say, lost an element of that huge surge of selling pressure that we had seen up until certainly Monday. Yeah, I mean, obviously yesterday's candlestick was a fairly decisive, strong bear candle, but the selling pressure is not what it was certainly back end of last week into early this week, and that gives me a little bit of hope. And I mean that's just hope in the fact that just to try and see some sort of normality returning to these markets, because the volatility is just immense, and it makes it very difficult to seriously analyze some of these charts. But gold, I think, hitting 30 on the RSI, is that restrictive? Well, it's sort of levels that haven't been seen for, well, since 2018, August 2018. But you look at other indicators, MACD is still accelerating lower. Stochastics relatively settled as well, but just on the, as I said, just on this hourly chart, the momentum is not as it was in this sell-off. You can see that in the past sort of 24, 36 hours. And MACD lines are they starting to bottom out at a better level, but at a higher level, which gives rise to potential for, I suppose, positive divergences and things like that. But it's something to possibly hang on to if you're positive on gold. But I think what I would say is that you've still got the fact that you're running negative candles, so the pressure is still there on 1445, which was that November low. And if the market can hold above that 1445 level and start to sort of bottom out a little bit, I think that gives hope to potentially for some sort of recovery. But obviously, the negative aspect and the negative bias is still there on gold, and a test of 1445 has to remain the sort of base case scenario at this stage. But just the selling pressure is just a little bit easier than it was early part of this week, late last week. So that's interesting. Anyway, it's something to watch anyway. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars. Thank you very much, and I will speak to you soon.